Data released over the European session. What's caught your imagination this morning, Darren?
Well, there are one or two items that took my eye. First of all, Poland Q1 flash GDP. So it's only an estimate number, but it came in at 3.5% year on year versus a forecast of 3.3% growth. So improving numbers as far as Poland is concerned. And then if we move, it gives you a flavour of the differences within the year, because you remember that Finland slipped into recession. We mentioned that earlier in the week. So there's a two-speed economy still within the Eurozone and the EU as a whole. Then we look at UK March construction numbers that came out this morning. We look at the month-on-month number, and output was up 3.9% versus the 2.5% that was forecast. So better for UK construction, though. If you look at the year-on-year figures, it's still down, but down by a smaller amount. So it's recovering. What is interesting, if you drill down though, is it wasn't house building.
Right.
That suffered into the election. So this was output in commercial construction rather than house building. Nonetheless, the Office for National Statistics says that that construction and industrial output update could add as much as 0.06% to UK GDP. That may not sound a lot, but when you think that Q1 GDP came in at just 0.3%, any increment is to be welcomed. And then the other number that really took my eye was the Swiss Producer Price Index. That came out at 2.1% on a month-on-month change for April, and 5.2% negative or minus year on year. And the takeaway from that is that deflation is still a threat to the Swiss economy. And this, the central bank's having a tough old time of it defending the currency, but also trying to try and fend off deflation. So tough times in Switzerland. At least as far as the central bank's concerned.
Understood.